Alright, what's up everybody? In today's video, we're going to go into the ICT Macros. We're going to show you how to catch entries within the wicks of hourly and 4-hour candles to catch the daily expansion, right? So we're just going to start here on the weekly chart, just showing you these 10 a.m. hourly candles are highlighted with the vertical line, and you can see that the moves that occur here within that 950 to 1010 macro, which is my favorite. You can see the moves that are occurring right after or during that hourly candle. So to start, we're gonna jump into this lower time frame price action here on the first day. You can see we took the previous day high overnight during London, and coming into New York, we got a Judas swing higher to then go lower, take previous day low. All right, so you may notice I've drawn out that previous day high here just to see they were coming back down from taking liquidity. And then here at 10 a.m., we get our Judas swing higher. You may notice this setup here from the last video. It's the permanent vacation setup. But I want to show you what happens when you combine it with a higher time frame and with time to align with price. So we had an SMT with NQ at the highs after getting this Judas swing higher on the hourly open. We displace lower, come back into a premium fair value gap, and when you have the higher time frame bias, you can be able to hold longer and catch these moves all the way down into sell side liquidity pools or discount inefficiencies on a higher time frame. All right, so this is just showing the example 6R. When you combine the macro, the higher time frame narrative, and all of that into these trades, right? So you get about a 30-point trade here with a 5-point stop loss, looking like 6.1R, right? So coming from the bottom of that trade here, you can see that once we took previous day low, we pretty much consolidate lunch, PM session, overnight, London session, all the way back until 10 a.m. the next day on Wednesday. Now we're going to dive into this fractal in here, this hourly candle. This is a 15-minute, but there's an hourly candle that expands here all the way down from 10 a.m. So we're going to jump into the 950 and 1010 macro here on this next day. Here's that consolidation. We're down on a 5-minute now. So you can see here at the beginning of the 950 macro, we push up for buy side, cool off, and then as this hourly candle flips here at 10 a.m. as well as the 4-hour candle, we get a push higher, takes buy side again, creates the high of the hour and the 4-hour. Then we sell off from there with displacement. We have a 5-minute fair value gap as well as a 5-minute order block. Price retraces back up into the 5-minute order block. Get that. You get your sell here with your entry. Take it back to the low where it swung. 5-point stop loss never gets touched, and you even get more if you held some runners. All right, so we're going to jump into the next day now. So this is that previous day over here, coming into the next day on Thursday. So here, off the open at 9:30, we make a Judas swing lower to take out previous day low and also dip into that 4-hour BISI that we saw a while ago. At 950 to 1010 macro, we dip into the BISI and displace higher, breaking structure here. Then, just during this hour, we kind of consolidate, retrace lower into this 5-minute fair value gap, and then into the 1050 to 1110 macro, we're just hovering in this 5-minute fair value gap. I put this quote here from ICT where he says, "Wicks are where the damage is done, the bodies tell the narrative," right? So you can see how the wicks are pushing through this 5-minute fair value gap, but the bodies are staying relatively on the upper half or on the top end of this fair value gap, especially when we get to the 1050 macro. So once time is starting to align with price, that's when you're starting to get real respect for this fair value gap with the bodies. And then here at 11 a.m., this candle where the hourly candle opens, the hourly candle dips down, creates the low of the hour in that fair value gap, and then pushes right back up and takes off, right? So here, if you entered, you're just kind of waiting. It kind of seems like it's not going anywhere. But once time aligns with price, right? Time and price. Once time aligns, then you get your move. That's why it's time and price. So these macros are going to help you with that. So we're in this 5-minute fair value gap, and if you took the entry here on the top of the fair value gap, even if you took it here, you never got stopped out with your 5-point stop loss. But if you did wait for time to align, right when it dipped back in, then I mean that is a killer trade, almost 4R in about an hour, right? That is how you can use price and then wait for it to align with time. And within these macros where the hourly candles flip, that's why these macros are what they are. 9:50 to 10:10, what happens at 10 a.m.? A new hourly candle, a new 4-hour candle, a new 8-hour candle. 10:50 to 11:10, what happens? The second hourly candle of the 4-hour, right? So to catch these big daily moves, you want to be operating within these macros. When price and time align, that is when you're going to get the best moves. You combine that with higher time frame narrative, like how you've taken previous day low and dipped into a discount array. Combine that with the lower time frame executions within macros, and that is how you catch these huge moves. All right, thank you guys for watching. If you found this helpful, please leave a like, subscribe, go follow me over on Twitter if you want to see some trades this week that I have been taking within these macros to catch big moves. If there's anything that you guys would like me to go deeper into, maybe power of 3, accumulation, manipulation, distribution, just whatever you guys think would be helpful, please leave a comment below and we'll see what I can do. Till next time, be safe.